Hello, dear students. Let us understand about bank finance. So, again, it comes under the concept of working capital, and we all know that in the sources of finance, basically there are three different kinds. One is short term, mid term, and then long term sources of finance. So, bank finance it comes under in all of these categories like short term, bank finance is supporting as well as for mid-term and even long-term. So what is this bank finance? So any individual when they are in a position of of requirement of funds, so this bank finance supports a lot to satisfy their needs, monetary needs, to fulfill like whatever they want to do. If they want to start a business, if they want to expand their business, for all of these things, so bank finance is what supporting a lot. Okay, so first let us see how it supports in short term. So overdraft is a common term used in banks. So overdraft facility, that is taking or withdrawing funds from the banks, right? Even if there is not any cash balance in your account, you can able to withdraw amount from your account, and that facility is actually called as overdraft. And it is not available to all customers. To then who to whom it is available, you know for the customers, like if they are very regular and loyal customers, and if they are repaying their cash within a appropriate time, so for those customers, so banks providing this overdraft facility, so that comes under short term. It doesn't require a long period of time, so very short duration this overdraft facility it has. And next is what, like, bank is also providing so many support to maintain cash flow. Okay, where else, like, for grant checks, and then commercial mortgages, loan agreements. So all these things, it is not of like a such a huge duration is required. So with the short duration of time, so banks supports for their customers to satisfy their needs. Next is working capital. Again, working capital is a fund where it is required to run the day to day operations of the business. So, invoice finance. So, invoice finance is something that you know the bills that what you are in a position to repay to your lenders. Okay, for all these things we can say as working capital. The production process that what you have to do for all these things is working capital funding supports. And there is a concept called as where it is mentioned here as factoring. Okay, so for factoring also, you know in the correct or the specified time, if the buyer as well as the seller, if they cannot able to meet their goals, so they'll meet another party called as factor, where he supports this buyer as well as seller to acting as a third party by satisfying their needs. So that is also of very short duration, so and cost is also somehow less. Coming to mid-term finance, that is medium term finance. So compared to this short duration, its period is somehow extended period. So all the term loans comes under this category, where a period of 1 to 7 years includes in this mid-term finance. So mid-term finance, leasing, hire purchasing, so all the concepts comes under this mid-term category. Okay, so where if you are willing to sell your uh, assets to the another party, obviously, so for certain period of time, that is for 5 years or for 7 years, that comes under this leasing concept and all. And next is what long term is, what a long period of time, so more than 10 years. Okay, so even it is here as mortgage repayable over a 15 year period, it is what given here. So such a long period of time. Okay, for the entire period you can you just need to pay the interest. Okay, so that is what the concept of this long term. See, you can able to sell or give to another party your property, plant, machineries. By means of that you can convert that into cash. Okay, so mergers, acquisitions, expansions, for doing all these activities, banks is supporting us using this long term finance. Thank you.